All right, let's dive right in. We're taking a close look at the sportswear world in 2025, and believe me, it has been a wild ride. Based on some fantastic analysis from HDIN Research, we're going to unpack the very different stories of three huge players. Amer Sports, who are absolutely flying high, the ever-steady Columbia, and PUMA, who's right in the middle of a massive strategic shift.
Okay, let's get into it. So here's the game plan. We'll start with the big picture, what the whole market looks like. Then we'll zoom in on each company because each one has a really unique story to tell. And we'll wrap things up by looking at the big challenges facing everyone and what the experts think is coming next in 2026. So if you had to sum up 2025 in one word, it's division. Seriously. The days of a rising tide lifting all boats, well, those are over. What we saw this year was a huge split between the winners and the losers. Success wasn't a given. It all came down to a brand-specific strategy and where it stood in the market.
Now, this quote from the HDIN research summary really nails it. They use this phrase, structural differentiation. And that's the key idea for today. It's a fancy way of saying that companies didn't just perform a little better or a little worse than each other. No, their financial results were fundamentally completely different because of the strategic paths they took.
And a huge piece of that differentiation puzzle was this, the dual drive strategy. This was the big battleground. On one hand, you've got direct-to-consumer, or DTC. That's selling through your own stores and website, which builds up your brand's premium feel and gets you bigger profits. On the other hand, you have wholesale, selling through partners. This gets your stuff in front of tons of people. Nailing the balance between these two, that was absolutely critical.
All right, let's talk about our first company and, honestly, the undisputed champion of 2025, Amer Sports. Their performance wasn't just good, it was explosive, and it was all thanks to some incredibly hot brands in their portfolio. I mean, just look at this number, a 43.4% revenue jump in Greater China. Let that sink in. This region turned into an absolute rocket engine for Amer, and it just goes to show how powerful their expansion strategy has been, especially for their top-tier brands.
And here comes the real wow moment. Amer's superstar brand, Arc'teryx, was bringing in an average of $1,800 per square foot in its stores. That is just an incredible elite level of performance. It perfectly tapped into that whole Gorp core trend, that mix of high fashion and high performance outdoor gear. It proves people aren't just buying a jacket, they're buying a status symbol, an asset.
This map just drives the point home. You can see just how crucial Arc'teryx is to their whole global plan. Greater China is the absolute powerhouse, making up 44% of revenue. But look, they also have a super strong presence in the Americas. So this isn't just one market getting hot. It's a global fire that's lifting the entire Amer company.
Okay, this is where it gets really interesting. Let's put these three side by side. At a quick glance, you might see PUMA has the highest revenue and think they're leading. But that's not the real story. The real story, that structural differentiation we talked about, is in the other two rows. Look at gross margin. Columbia is in a league of its own at over 50%. Then look at free cash flow. Columbia made over $200 million in cash. PUMA, on the other hand, burned through more than $500 million. This one chart tells you everything. Three companies on three completely different journeys. So let's switch gears and talk about that amazing profitability story with Columbia. They might not have the flashy growth of Amer, but they have something that for investors can be even more attractive, a rock-solid, fortress-like financial foundation. And the magic number is right here, 50.5%. That's Columbia's gross margin, and it leads the industry. Basically, it means for every single dollar of stuff they sell, they keep over 50 cents as profit before other expenses. That kind of efficiency, plus the fact that they're generating cash and have low debt, is why analysts call them a cash cow. It's a safe, reliable, and seriously secure company in a pretty choppy market. And from the safe and steady cash cow, we go to a totally different story. For PUMA, 2025 was all about taking some tough medicine. They literally called it a year of reset, which was a strategic choice to accept some real short-term pain in hopes of a much healthier long-term future. And this chart says it all, a massive cash burn of over €500 million. Now you're probably asking, why on earth would a company do that on purpose? Well, PUMA was actually buying back its own product from its wholesale partners. They wanted to clear out all the excess inventory, reduce the need for discounts, and basically reset the brand's image to be more premium. It was a really painful move for sure, but they saw it as a necessary one. Okay, so we've talked a lot about what the companies themselves have been doing, but of course, no brand operates in a vacuum, right? Let's talk about some of the big external challenges, the headwinds that are hitting the entire sportswear industry. Analysts are really watching three big things. First, you've got geopolitical issues and tariffs, which can jack up the cost of making your products overnight. Second, climate change. Think about it. A super warm winter is a disaster if you sell ski jackets and boots. And third is something a bit more specific. Amer Sports, for all their incredible growth, had to report something called a material weakness in their financial controls. Now, this means their own auditors found a significant flaw in how they report their financial data. It doesn't mean the numbers are wrong, but it's a red flag that investors are definitely going to be watching very, very closely.
And if you think that tariff risk sounds a little abstract, check this out. Colombia paid an extra $50 million in 2025 just because of trade tariffs. That's not some number on a spreadsheet. That is a direct, multi-million-dollar hit straight to their profits. It shows you exactly how global politics can affect the price of your fleece jacket. So, after a year with such huge differences between these companies, what does the road ahead look like? What are the experts predicting for 2026? Well, it looks like the story of division is going to continue. The forecast is for Amer Sports to keep its title as the growth star, just chugging along with its premium brands and direct sales strategy. PUMA, on the other hand, is probably in for another transition year. The full effects of that big reset haven't kicked in yet, so their profits are likely going to stay under a lot of pressure. And that brings us to the big final question. Looking forward, what's going to matter more in the world of sportswear? Is it going to be the supercharged, high-octane growth of a premium powerhouse like Amer Sports, or is it the slow, steady, cash-rich stability of a company like Columbia? The answer to that is going to define the next chapter for this entire industry. Thanks for joining us.